Hello and welcome to this week's crypto update. So what's happening in the macro and how is it affecting risk on assets? Well, as we can see here, extreme fear is very much in effect. Why is that? Well, we've seen Bitcoin make huge moves to the downside and there's lots of questions. Was that the bull run? Is it over? Where to from here? Well, let's have a look and see what's actually happening out there. So Bitcoin slips below 100,000 as total crypto liquidations hit 463 million. Bitcoin slipped to 97,870. It's actually gone down now to about 94,500 as liquidations total 463 million, driven mainly by long positions across the market. Analysts pegged Bitcoin support near 94,000 amid rising production costs. What that basically means is they're saying it's costing that much on average to mine a Bitcoin is now 94,000, and a broader tech market decline. With rate cut odds dropping and macro uncertainty growing, traders are shifting towards safer assets. What's about the rate cuts? Well, the Fed may not cut rate cuts in December. So a month ago it was seen as an absolute certainty that they were going to cut rates. Now it's not so sure. Odds for a cut in December dropped to about 50-50, and multiple central bankers have come out with more cautious remarks in recent days. What's that? So the rate cut odds have collapsed from 85% to near 50% as the Fed flies blind without October CPI and job data. So obviously because a lot of government workers weren't working with the last 40 odd days, they don't have a lot of the jobs information, so the Fed are flying a little bit blind. They had already cautioned at the last meeting that it was very possible that there wouldn't be a rate cut, even though prior to that everyone believed it was absolute certainty. And so now that is brought down to just a 50-50 chance of happening, the markets are starting to price that in. JP Morgan now pegs Bitcoin's production costs at roughly 94,000, up sharply thanks to rising network difficulty. We saw that a while ago. So they are hoping that places a bottom under the bid of Bitcoin. We've already been down to very close to 94,000. Can it hold 94,000 or will it go below? If it goes below, it could be problems. ETF outflows aren't helping. US spot funds have shed billions over the past 2 weeks and whale activity has cooled. And in fact, the other point about that is the OG whales have been selling significantly over the last number of months. $50 billion worth of Bitcoin have been sold by OGs who've had their crypto going back 10 years and more. So that's another huge movement. Now many see that as just it's their opportunity to get liquidity. They have this value in Bitcoin. Maybe they only bought it for 10 grand's worth back in 2010 at $1 a pop. Now it's worth over $1 billion. They're looking to liquidate. They couldn't do that all along because there was no one there big enough to buy. Now institutions have been buying it, and that was their liquidity opportunity. Retail sentiment has flipped deeply negative across Bitcoin, Ethereum, XRP and so on. The kind of fear cluster that often marks inflection points. In other words, could it change from here? And also we see institutions are looking for direction confirmation. In other words, institutions aren't piling money into the likes of ETFs until they get a better view of, is this market going up or down? They don't have to act quickly. They just want to make sure that they're trying to get in at the right times. Thanks to government shutdown, liquidity has evaporated from markets in recent weeks, but is that about to reverse? So that's like their checking account. You know, it ran really low. It was down to around 300 to 400 billion. They made a decision that they were going to reload that. That in effect is taking liquidity out of the market. Their goal or their target was to get to 750 billion, but because the government has been shut down, they haven't been spending money during this time, and it's now after hitting $8 trillion. This gives them liquidity to pump back into the market, so there could be 250 billion to come into the market in the not too distant future to really drive on assets. So what has caused all of this? Why the drop? Well, rates is one. The uncertainty about is there going to be a rate cut or not. Others are the lack of economic data, of course, because of the government shutdown. No one knows what the employment figures are like. And so again, when people have uncertainty and when the markets have uncertainty, they react negatively. The one thing the market loves to go in a positive direction is to have clarity. There's been a hawkish Fed rhetoric where they've been talking about, not necessarily going to have any rate cuts. There's been a lot of major corporate layoff announcements. And of course, we hear about these bearish positions from big short investor Michael Burry. All of these are potential possibilities as to why the market has dumped the way it has. But for me, the big thing is two things. The economic data and the AI bubble. So economic data first. Without the economic data and uncertainty about the rate cuts, the market is having to price in higher risk. And when they price in higher risk, that creates a sell-off. When that economic data starts coming back into play, it may bring some clarity to the point and take some of that risk off the table, and the market might reprice back up if the data is some way positive. In other words, if the jobs seen isn't too bad, because if it's doing okay, it'll allow the Fed to cut rates. The AI bubble for me is a bigger thing. We touched on this last week. Is there an AI bubble? In my opinion, absolutely yes. But is there further for it to inflate before it pops? I believe so. The governments around the world, and certainly the US government, are willing to pump whatever money it takes into AI in order to be ahead in the AI race between itself and other countries like China and others. The biggest companies in the world, the big tech companies, the Magnificent Seven, are pumping unbelievable money into AI. Will AI do all they're hoping it will do in the future? Probably, and probably much more. But will the funds that are being pumped in last year, this year, start paying dividends by next year? And if not, will that be seen to be a negative outcome? There was a huge amount of companies put massive money into the whole internet bubble, and a lot of them popped and went to zero. It had a massive negative effect on the market, and then over time it came back, and then we see the absolute giants that built on top of that internet. Will something similar happen here with AI? Will we see this big bubble pop? I don't think we'll see it soon, because the big difference between now and the internet bubble was a lot of those companies that were investing in the internet had no money, had no income. The Magnificent Seven have huge income. They're making tens of billions, hundreds of billions every year, and they're pumping that into AI. It's a different scenario, but I still believe there's a bubble here to pop, but I don't think it's going to happen soon. When it pops, it will most certainly drag the economy with it. But I don't see that happening soon. So what is actually happening? Well, let's have a look at the charts and see what this actually might mean. Of course, let's look at Bitcoin first. So here in the Bitcoin chart, this is the daily chart. So you can see right back to the highs of June 25. And you can see, if I scroll out here, when we were up here in the 120s, I actually put in these two boxes, and you can look back at the videos and see these boxes in place over the last couple of months. And up here, I was saying that I felt we had to come down into this box, this sort of zone between 107,000 and 109,000 in order to reset. And then maybe if they can hold that box, then we could go off to the races and go to new all-time highs. And I remember saying actually here, just at the Jackson Hole announcement and meeting, I was saying, I think this is going to make its way back down to the box. Straight after the meeting, there was a huge green candle. Many were saying that was a bad call. But literally a few days later, back into the box we did. But it held that line and ran from it. It came back down again. It did its best to stay out of the box. Took off again, and then we had the big tariff announcement again from Trump, and it just shot through. But again, it regained, got above the box, ended back up inside it, fought to get out, back inside it, fought to get out, and eventually we've just seen it completely lost it. As soon as it lost that on the daily candle, it went straight back down to fighting to get it, stay out of the next box. And of course, we've seen it try to make its way back up and back down again here to this resistance zone. The challenging part here is it appears to have run straight through the box, but we'll see at close of business today if it can make its way. Will it close back in that box? If not, it suggests further downside risk. Where would the next box be if I'd drawn it? Probably about here between 91 and 89. So it'll be interesting to see if it can hold these zones or not. Maybe it makes its way back into the box. So the bottom line is Bitcoin is struggling. And if we scroll out and we go to 1 week, this is the 1 weekly chart where each line is 1 week. We can see here the last bull run, it had a double top, okay, which was unusual. History doesn't repeat, it rhymes. So we've had 4-year cycles where we've had this big top in the first two. So on 13 and 17, we had one peak, one top. People were saying, just keep repeating doing the same thing. It didn't repeat, it rhymed. It still had a top in the 4-year cycle, but it had a double top, which was different, but we still had our 4-year cycle. Here we can see that we've been moving up. Bitcoin has made a strong move. We'll talk about altcoins in a second. Is this the top? Will history repeat or rhyme or neither? Is it different this time? Well, I think it's going to rhyme, but how it may be different is this. Number one, the 4-year cycle, I believe, is dead. The 4-year cycle was based on Bitcoin halving every 4 years. And then we had these cycles. But now the theory is that it wasn't following the Bitcoin halving, it was actually following liquidity, which was going in the same 4-year cycles. The big difference now is that 4-year cycle, the liquidity cycle, has been extended. Since COVID, it's been extended. And so now it's a 5-year cycle. Will Bitcoin follow the liquidity cycle rather than the Bitcoin cycle? If it's the Bitcoin cycle, there's ever a possibility we've just had the top and that's been it. And we've had no altcoin season. And I can show you we've had no altcoin season. Or are we going to see something more rhyming with the last cycle where we had a double top? And do we see a pullback here and we go again and reach a new all-time high into next year? We'll see. But if you look at Ethereum and you start looking at altcoins, you can see with Ethereum, again, these two boxes were drawn way back when. We fought the same way with this, but now we're just at the point where Ethereum hasn't actually... Bitcoin has entered the box and gone through. Ethereum isn't here yet. If Ethereum can come in here and hold, that's going to be a really positive sign for altcoins. And so then if Bitcoin can regain and get back up, I believe this will be the start of the altcoin season. Why? Because very unusually, if you look at the crypto market right now, usually when Bitcoin sneezes, everything else gets the man flu. Whereas this time, Bitcoin, if we look at it, and we'll go into CoinGecko here, we can see Bitcoin has gone, 4 to 5% has been fluctuating today between. Usually in that situation, the bigger, the altcoins will go down by 15, 20%, the bigger ones, and the smaller caps will go down by 40, 50%. That hasn't happened on this occasion. For example, if I just click on 24 here and we'll get the lowest, the ones that fell the most in the top 100, right? If you go down past just the first couple, it's less than 10%. These are the altcoins in the top 100. If you go further out, if I scroll down here and I'll go to the top 500. So I'll just scroll down to the bottom here and go to 5. So this now is the top 500. You'd expect these to get really crushed. They're way out the mark. You're looking at market caps of about 100 million. And if I click on the 24 hour, you can see again, if you pass the first 6, 7, 8, you can see they're all in single digits. So Bitcoin has moved by 5%. These only moved by 8, 9%. And these are ones way out the risk curve. Let's go one more. Let's go to the top 1,000. So now you're way out the risk curve. When Bitcoin moves in any direction a little, these can move massive multiples of a percentage of whatever Bitcoin does. So you'd expect if Bitcoin does 5%, these go 20, 30, 40%. But that's not what you actually see. If you click on here, 24, again, you take out the first, 6 or 7 worst ones. After that, you're looking at 10%, 11%, 7%. They've barely moved any more than what Bitcoin has. That's highly unusual. And so I think where we're moving to here is this. If Bitcoin can hold its position, even above 90,000, then, and you'd expect it will hold somewhere between 90 and 94, right? Unless there's a very significant pullback. But I think we can hold 90 to 94. If it holds 90 to 94, and Ethereum can hold above that sort of 2,900 mark, then I think that sets us up where Bitcoin can go and altcoins will actually run with it this time. You can't look at the likes of Ethereum. We go into the weekly chart and look at this and say that we've had an altcoin season. The last altcoin season, Ethereum went from under $100 to $4,800. Massive upside. This time, it's barely hit an all-time high. It's pretty much the same as what it was before, bar $100. That's not altcoin season. We haven't had altcoin season. So the big question is, are we going to have an altcoin season? I think absolutely we will. But as always, it doesn't repeat, it rhymes. How will it rhyme? We don't know for sure. But I believe we're still going to have it. And the big question now for people is, if you're looking to buy into altcoins, is now a good time to buy? Well, based on what we see here, even when Bitcoin is getting an absolute hammering, and Ethereum's getting an absolute hammering, a lot of the altcoins, out the risk curve, are not. In other words, I think they've nearly reached their floor. It doesn't mean that if Bitcoin doesn't come back further, they can't go a little bit further, and that's why you would DCA in and not go all in straight away. But if you have projects that you really like, altcoin projects, now could be a good time to be getting an entry point. And just to further look at that, what I'm going to do is look at the top 100 again. And if you look at, if you click on here and see what one has gone down the most, Look at Aave in the top 100. Aave is the one that's gone down the most. It's down about 12%. Aave is a really good project. You can go even further and go to the likes of Uniswap. Uniswap's an incredible project. It's down now it's down to 4.5 billion market cap. If we click on there and we look at its history of market cap, it was at one stage 22.5 billion. That's a 5x from here, from one of the top crypto projects. It's in the top 400. It's the top DEX in crypto bar none. It's got huge volume. It's making huge fees. Just to go back to its previous, there's a 5x on that. I'm not saying go out and buy a uni. I'm just making an example of it and say there's some amazing projects out there for amazing sale prices. Can they go much lower? Of course, everything can go a little bit lower, but is there a good entry point? And if you DCA, then the upside potential is very significant. Hopefully you found that useful. We'll talk to you all very soon.